All right, everybody, welcome on the 24th of March, 2012. Looking at a chart of the S&P cash. Closed at 1397 on Friday. Looks like decent support is around 1375. If we were to take a look at this area of support here, I chose to draw the trend line here as opposed to opening it up to here. I think this is more realistic in this level. So we still are above the trend line. We're still kind of in a channel here if we were to draw an upper trend line above this area of resistance here. As far as the support goes, we're only going to hit support so many times, and the odds are we're going to break through it. So at 1375, that's what we want to see hold. The trend is still intact. We're above all major moving averages. Like we said yesterday, the volume is low, VIX is low, but the VIX could go much lower. If we look at where the VIX levels were in 2007, it was about half of what it is now. So that's just one more indicator. But again, the trend looks decent. For further breakout, we'd want to get above the highs here that were put in on Monday of around 1414. Again, we're only going to hit support so many times, and we're going to break through it. And take one more shelf down, which would probably be around 1360, 1340 in that range. But as it stands, we're holding 1370, 1375. So the trend is good. Let's take a look at gold. You could play a bounce here in GLD if you wanted to, with a fairly tight stop under previous support. That previous support would be Thursday's low. We did break above this downward sloping trend line, and possibly will run up into an area of resistance here, which was once support, is now resistance, thinking maybe 165, 166. But the overall trend is down in gold. But if you did want to play a bounce, I would have my stop parked very close here on a percentage basis. You could flip over and do the same thing on the gold miners. Let's see what these look like. Here's your gold miners here. Ideally you'd want to see it clear above this area of resistance here, these candles. But if you wanted to take a shot at it again, that's a pretty tight stop. Maybe we'd have a chance at filling this gap right in here. Speaking of gaps, let's look over at the IEF 7 to 10 year Treasury, covering bonds on the Treasury side. Again, we're keeping an eye on this gap. We're looking to play, doesn't have to fill this gap. This actually looks a little tired already. At the most, we see it coming up to 104. But the odds favor that we fill this gap, or it fills the gap. If you wanted to get in now, I would have my stop under the low that was put in on Tuesday the 20th. You can see here that this almost happens on a daily basis. But you can see that this particular candle put in a low here, and then anybody that had any stops parked there were taken out intraday the following day, just enough to take them out probably by a couple ticks. But in any event, the overall trend in treasuries is still down. We're looking early next week, and possibly this already is going to start heading up again, but we're looking for this gap to get filled on TBT. So we're looking for an entry around 20, maybe 1996 in that area. We would probably have our stop pretty tight for this ETF because this is double the ride, Ultra. Probably have our stop right around 1920 on that. Let's see. We can take a look at silver. Looked at gold. Looked at treasuries. We'll finish up with oil. Same thing here. I mean, this is the trend is down. We've got resistance at around 32, 33.30 in this area. It's probably shortable if we get up around in here. But if somebody wanted to play a bounce, very similar to gold, they could just put a stop under Thursday's low. Let's take a look at the inverse of this, which is the double short silver, ultra short. This is a post we put out on the 13th. Let's see if this was actually the 13th. Yes. Inverted head and shoulders. Left shoulder, head, right shoulder, or you could say kind of a cup and handle, especially if we got above this 1050 area. We're back down at 1071. But I see a potential to short silver. Maybe let this pull in, see if this level of support holds here. Maybe the low that was put in on the 19th of 1014. But if we get a nice bounce here at the 50-day moving average, which is also support, which is around that 1050 level, if we were to bounce up and kind of clear this resistance again, then I think we're going higher on the short side of silver, which means we're going lower in silver. All right, let's finish up with oil. This is an interesting chart here. To me, this looks like it's going lower, but we'll see. That's why we want to wait that if we do go long oil here out of this flag pattern, we'd want to wait till we got confirmation maybe above 2760, possibly as high as 28. Clear this resistance here. But we want to be concerned about this downward sloping trend line pushing against this flat base here. Because normally what that will mean is that we're going to push through this. So this is kind of an interesting chart because we do have a flag. It's not a pennant, but it's a flag. So it could go either way. And because it could go either way, we want to wait till we get confirmation and increase the odds in our favor. So if we do get long in this and the managed accounts above 2760 or above 28, we're going to just, the simple blocking and tackling, have our stop under support, which would be in here. And conversely, if we were to break down through this, we'd have to look at the short side of oil, maybe DUG again, and that would probably mean that we're going to maybe $100 a barrel before we're going to 115. What else? Let's finish up with the Russell, because we put a still chart up on this earlier in the week. And I believe we did a weekly. That's why you're seeing these numbers here. But let's just take a look at a daily. We'll flip to a weekly, and then we'll put a fork in it for the rest of the day here. This we want to see this clear above this area of resistance. And we're holding the 50-day moving average. Pretty decent candle here. So we'll see. We would get long next week with the Russell, thinking that we're going higher in all the indices. And we would clear last week's highs. We just would get back in. We would start off with the Russell, possibly the diamonds. But in any event, let's take a look at this as a potential 5-wave pattern in the Russell, the IWM. So here we are. If you guys are familiar with Elliott Wave, I'm certainly not an expert in Elliott Wave, but I do know how to recognize a 5-wave pattern, or an ABC. So what we would have here is a 1 up. 2 is the corrective wave. 3 is a longer wave. So this would be the top of 1, bottom of 2, top of 3. The 4th wave is typically sideways or flat. It can even pull in. A 4th wave can even potentially go down very far, as long as it doesn't break wave 2, the bottom of wave 2. So we could fade here. But I do see a potential, as we mentioned here, a sloppy inverted head and shoulders, left shoulder, kind of the head pattern, right shoulder, or you could call this a mini cup and handle in here, bullish. All these are bullish, as is the potential of a 1, 2, long 3 wave, sideways 4th, and typically in a perfect world, the 5th wave is, the 5th wave is the same length as the 1 wave. So that could put us up around in here. That would also be a breakout. And everybody tries to buy stocks on the cheap. But the highest probability for a move, a big move, is when a stock, a commodity, an ETF goes to all-time highs. Because all the sellers are out. And there's nothing but clean air above. So we'll see. Anything could happen. But as always, we want to answer the what if. We would have our stop under previous support, which in this case would be in the, within the area of our risk parameter in terms of percentage back. So if we were to take a breakout, let's say above 83, we would have our stop at, just under 77 here, 77.50, and that would be within that 5, 6, 7, 8%. All right, you guys, that's it. Thanks again for tuning in to the blog. And we will be moving to a Sunday radio show on KCBQ 1170 starting April 1st. So we'll have 2 shows next weekend. One show, which will be our last show at 1:07 p.m. on KFMB 760 on Saturday. And then we'll go Sunday mornings at 8:30 on KCBQ 1170 starting April 1st. All right, we'll see you next week on the blog. Enjoy your weekend.